You don't have to sell options or run a Ponzi scheme to fall victim to this either. Plenty of ways that retail investors do this on a much smaller scale. They put most of their money into a single stock because it's surging upward. They choose their returns with leverage or chase the latest trend. All of these work great until they don't. Welcome back to another episode of jbandd Spark 6. We're sniffing out the market for some golden nuggets. We're going to jump straight into data. After that, I'm going to show you why IBKR Interactive Brokers is my favorite broker. Not because of their user interface, but because of their research tools. Okay, but let's jump into the data. Energy and tech sectors as a percentage of the S&P 500. Although the energy sector has been outperforming a lot since the start of the year, has a lot more room to take up a bigger percentage of the S&P 500. Consumer sentiment index, very low. Some think that we see a bounce in this. I don't see how. And then the bounce in consumer sentiment leads to more retail sales, whatever. I don't think we need a bounce in consumer sentiment to get that bounce in Vans Corp, this consumer discretionary play, Kraft Heinz, consumer staples play, Estee Lauder, consumer discretionary. I don't think we need that because we're already buying these companies at very cheap prices. Anyways, Bitcoin realized profit loss ratio. So I want to use this software, whatever the hell it is, platform, and I want to see what this looks like for our individual names, if that's possible. Because this, I really like this. As you can see, when the loss ratio is very low or high in losses, um, it's been a good time to buy Bitcoin. As well as when it's been very high in profits, it's been good. Like it's. I really like this. I really like this. I don't trade Bitcoin, but I just like it. Quickest recoveries from a deep pullback. So the last couple times we've had very big recoveries from a deep pullback like we did this month. The performance doesn't look that great. A week later, 2 weeks later, a month later, 2 months. Okay. Uh, anyways, I have a report here. Oh, I already opened it here. Let me show you. Earnings report. I haven't read it yet. I should. It has to do with earnings, and I'm pretty sure I could find some valuable information there. But it's by the B report. You can probably search up B quarterly, Q4 2025, and maybe you can find some golden nuggets in there on how to play earnings better and just capitalize on those moves. They had a podcast where they explained their strategy, which is pretty much how we trade over here at jbandd Market Sniffs. We have our core positions in stock, right, of certain companies that we like with the big fundamental thesis behind each one, and then we just play options around the core position, try to catch those moves up, the moves up when the technicals look good in the short to medium term, and they just pretty much do the same thing, especially for earnings. But yeah, SPX seasonal composite 4-year presidential cycle. Look, so this was 417, but we're now 423, not that much of a difference. So this is where we are right now, okay? This is where we are right now. Midterm election year. So we might be topped out here. I really like this. I really like this comparison. Look, I'm going to be honest. I've been shorting this rally, and I've been getting squeezed. I've been getting burned. I've been paying tuition, whatever you want to call it. But at the same time, I'm also playing longs on different names. And nonetheless, I've been making money. Some people just short, and they just short, like full port just short, or not full port, but they don't hedge with long or something, and they just get burned if they don't time it right. Um, and it's like, come on, like, look, I know this rally is very overextended. It looks like you're just itching to short it, right? At least I am, and these people that I have in mind as well. But at the same time, take advantage of the momentum, take advantage of the move up. And so I've been playing longs, but not in the popular names, not in semiconductors. Yes, they've been going up a lot. I've actually been shorting those too. Maybe I should have been longing, whatever. That's hindsight, right? But I've been longing other things. Um, Lucid, but I got bagged in Lucid. Albemarle, that was a nice winner last week on Friday, I think, or Thursday. PDD, I started a new long position on that in options. Again, not financial advice, opinion only. Speak to a financial advisor before you make any financial decisions. Nothing in this episode should be construed as financial advice. Okay. Anyways, so I started a new position, so I haven't profited from it yet. What's one that I profited from? Well, look, I shared some trade ideas here. So I just opened these. Oh, AMD, I tried this short. It's going to close negative 100%, negative 99%, whatever. It's going to expire worthless, is what I'm saying, tomorrow. Because AMD's up 7% after Intel announced earnings, whatever. SOXS, that's a short ETF for the semiconductors. Just started that position yesterday. Down a little bit. Okay, not a big deal. NVIDIA, I tried some shorts, some weekly shorts. Didn't get the desired move, close for 20 and 30%, whatever. Yeah, so the lucid position that I just opened 2 days ago. Advanced auto parts, just opened some swings on that, trying to buy some more on a bigger dip, but just open that. I tried shorting Caterpillar this week on some weeklies. They expire tomorrow. Those are going to expire worthless as well. Okay, whatever. What? Hold on. Yeah, here's Albemarle. Oh, I did play PDD already, like a week ago, and I sold for profit. Sentinel, sold for profit. PayPal, sold for profit. See, those are okay. Yeah, that's what I played for profit. So yes, that's when the market was squeezing. So I was still playing longs, but at the same time, as you can see, I had wins and losses. My wins were the longs, and my losses were the shorts. I was too early on them. It's okay. I did short the S&P 500 today. Didn't alert it. Got a small win on that. CHDN reported earnings yesterday. Played that, didn't alert it. Got a win on that. But it's a mix of wins and losses, shorts and longs. But it's a price I'm willing to pay. Why? Because if I feel the markets are overextended and I'm exposed to full 100% long exposure, then I will feel uncomfortable. I won't be able to sleep well at night. But if I know, if things go bad, then, at least I have some hedges to the downside, and they'll, give me some profits. Maybe erase some of my losses, or just, keep them low. And that way, I'm able to sleep good at night, less emotions, and I always look at it as a small price to pay for better performance. That's just me. Everybody's different. Some people don't need hedges. Some people, without hedge, they still feel comfortable. Like, I don't got it like that. Everybody's built different. So you have to find your own system. Anyways, Max 7 3-month put skew has pulled back. Again, this is from a week ago, so could be lower now. Call skew has been going up. Could be higher now. What is this? S&P 500 put call equity. Okay. Very low. Could be even lower now. SPX historical percentiles, Max 7 historical percentiles, skew over volatility. Okay. China, US, what's the context? I forgot. I think it's nuclear reactors. I think this is nuclear reactor comparisons. Pretty sure. I think China market performance during previous PPI inflation periods perform well. MSCI China 12-month forward PE ratio, pretty low, okay. So cap weighted excluding banks 14.4, median stock 15.4, cap weighted 11.6. S&P 500 12-day return profile looks a lot like the same period in 2025. In fact, the pace at this time, In fact, the pace this time even slightly outstrips last year's Liberation Day bounce back, which saw so we've had a huge bounce and similar volatility. CTA positioning in U.S. equities, again a week old. JPM U.S. technical position monitor was very low before the bounce. So this is just a comparison of China market share in different sectors, industries, whatever. 2023, 3 years ago now, and 2005. So it was, a lot of these were dominated by North America and Asia Pacific. Now we've seen a bigger market share jump from China in all of these. VIX volatility spikes have been erased quickly recently. That's what happens when you introduce all these leverage ETFs and all that nonsense. It is what it is. You just gotta adapt to the new market. Okay. Look, I'm gonna be honest with you. I anticipated a bear market rally in the indices before we got the rally around that bottom. I said, you know what? I think we're gonna get a rally to wash out all these put holders, but I didn't anticipate new highs this quick. At least, probably not even new highs. I think I anticipated just a lower high or retest the high but not break it, and we've broken the highs significantly. But you just gotta adapt to these new markets. Okay, largest outflow from cash ever, risk on, but also tax related. Well, since it's tax season, I'll take it with a grain of salt. China 10.8 billion outflow, largest in 11 weeks. You know what I hate though? There's a huge divergence between Chinese equities, like mainland China and Hong Kong. A big divergence, and Alibaba, Meituan, PDD. These names are mostly influenced by Hong Kong performance. And then there's also a big divergence between just the Hang Seng index and the tech one. Whatever. SPX 1 month cost Q. Again, this is a week old, so China's energy mismatch. Fundamental challenge in its renewable energy push. I'll read that. You can pause that. China warns strong El Nino this year may worsen global fossil fuel. The US dollar and the Fed. So you can see here when there is more. Hold on. Well, in this case, 2022, there was more tightening. There was a bigger outperformance. Less tightening, we go down. More easing, less easing. Okay, yeah. So, look, if we're gonna get all that easing that everybody was anticipating just a few months ago with the incoming Fed chair, then you should probably expect a weaker dollar, especially since it retested resistance at 100 and then rejected, and now back into the range. Again, we talked about the tailwinds before. No, headwinds. Let me see if I can find it again. Just quickly go over it again. Shoot. Here you go. Persistent twin deficits. Confidence in the U.S. as a stable geopolitical anchor has weakened. So, these things were being talked about a lot by investors just a year ago, just a few months ago. And now we got the whole Iran war situation. Everybody forgets about that. Like, everybody's going to eventually remember about the whole fucking situation with fucking debt and everything that we have in this country. But for now, it's just whatever. Global earnings growth. Biggest in emerging markets. Smallest in EAFE. What does that stand for? Why do I not know what that is? Europe, Australia, and Far East. Okay, I see. Ooh, here we got a big text. Data centers accounted for around 50% of total electricity demand growth in the U.S. In China too, electricity demand growth was strong. Solar largest contributor to growth in global energy supply for the first time in 2025. Natural gas second largest. Battery storage was the fastest growing power sector technology in 2025 with roughly 110 gigawatts of new capacity added. More than 12 gigawatts of nuclear power reactors began construction last year. AI traffic to U.S. retailers rose 393% in quarter one, and it's boosting their sales or whatever the fuck revenue. So keep an eye on Etsy because Etsy had made that deal with OpenAI, and so if you fucking want to shop for something on OpenAI's platform, you might get some Etsy products pop up. So keep an eye on Etsy for that. Don't know if there's anything between Vance Corp and OpenAI or any other AI company, but yeah, it's just interesting. S&P 500 around major geopolitical events. We went over this last video, but here's another update, even higher, even more extended. Shirley P ratio hits second highest level of all time, only behind the dot-com bubble. IGV over SOX, so basically software over semi performance. Very low, very low. Honestly, probably went lower today because we had a huge semi outperformance and a huge software dump. Semiconductor ETF monthly flows, huge through April 16th since last week. S&P 500 stocks net call volume. Net call volume, calls minus puts. We have a very high call volume, guys. Very high call volume. Retail's favorite stocks outperform mutual fund favorite. Yeah, the meme stock, meme ETF has outperformed a lot this fucking month. 56%. Sorry for my cursing this episode. You know, I'm just being me, and that's me. All right. Mega cap call volumes. Yeah, again, so I'm getting frothy vibes. I'm getting local market top vibes again. Why? Because we have mega cap call volumes at highs again. We have retail meme ETF up 56% since I posted this. Could be higher now. I have the biggest FOMO Momo trader that I know. FOMO Momo meaning fear of missing out momentum trader. They're separate, but this person is special. It's special, not like slow, but like special. Like they're a combination of both. Why? Because they have the biggest FOMO gene I've ever seen in anybody before. Anything that is mooning and they're not in, they get that itch, but they can't control it and they go in, right? And I had Momo to that because honestly, they go hand in hand. Because if you have fear of missing out, that means you're playing stocks that have momentum, right? And it works in hot markets. It works in hot markets. I am not going to deny that. But here's the thing. Again, now I'm just going to say the full sentence. The biggest FOMO Momo trader that I know, that I've ever seen in the 5 years that I've been in this. 5 years is crazy. Anyways, okay, let me say without any distractions. The biggest FOMO Momo trader that I know, just yesterday said in a Discord room, I had the biggest month since COVID. You know that Thierry Henry meme, the soccer player, where he's just like smiling, but he's like, I don't know what the hell he's doing with the smile. He's like I don't even know how to do that. That's me right now, bro. Like, if that's not a market top signal, then I don't know what is. I don't know what is, man, because see, I came in right after COVID. But as everyone may know, COVID was very volatile. It was the quickest market crash ever. Well, excluding like any intraday moves. So like it lasted like a fucking month. You got big dump, and then V-shape back to highs like so quick, right? So it would make sense why that would have been a very hot year for him. And then came in 2021. It was 2020, 2021 were very, very hot years. And now a trader, I wouldn't say investor, a trader who has the biggest fear of missing out gene said they had their biggest month since COVID. Does this not tell you how hot the market is? Sure, you can argue, well, maybe he just got better. Maybe this or that. Dude. Dude. Like, oh my god. This particular Discord room, I left it in January. Okay? 3 months ago. I left. Why? Because I just got distracted and I wanted to focus more on my reading. Okay? I came back a week or two ago. 2 weeks, I think. So 3 months later. And, I start seeing what people say and everything once again. And it just baffles me. It baffled. You know what baffles me? It baffles me how people just don't change. People don't change. And they'll know their bad habits, the things they need to change for their own good. But they don't do it. And No, look, good for the person. Good for the person because they had a good month. Um, like I'm happy for that person. I hope it how to explain it. I want to say like I hope they don't lose it, right? But I feel like that kind of sounds like shady, like I'm trying to throw a jab at them, but I'm not trying to. It's because literally the other day I was reading something. We'll come back to this right here. Let's read this, okay? If like it fits perfectly for this. 2015, Ty Lopez started running a famous "Here's my garage" ad. Took in a lot of profit, 50 million in revenue, whatever. And then he tries to open a holding company, retail e-commerce, and then he raises 112 million from investors, and it just goes to shit. He loses all that, and then he gets booked. He gets charged with fraud and running a Ponzi scheme by the SEC. He was on top of the world, and then he got greedy. He then he gets locked up, right? Oh, I'm glitching. I'm lagging. And here, the point of the author is look, all of these falls from grace illustrates a deeper truth. Survival is the only success. It doesn't matter what you do in life if you can't sustain it. You can make 100 million, but if you end up in a prison cell or broke, who cares? That's not success. In fact, it's the opposite. He goes on to explain. Would any of us want to be in their shoes? No. Nobody would want to be in prison. Nobody would want to, be in a position like that, right? There's no amount of money and fame that is worth a loss in reputation and freedom. Here's the funny part. Lopez, Bakeman, all these fucking scammers, whatever the hell. They had real profitable businesses. They just wanted more. They chased more. They got greedy, and that led to the downfall. So he drives some people to risk everything for just a little bit more. Okay, it's the most negatively asymmetric payoff you could imagine. The upside is capped, but the downside is unlimited, and yet people still make this trade all the time. There are people out there doing it right now. They may look successful today, but they won't hold on to their success. And this author was reminded of this recently reading Fooled by Randomness by Nassim Taleb or Taleb. I don't know. Taleb tells a story of a trader who was rewarded with larger and larger bonuses each year by pursuing a high risk leveraged strategy. The trader outperforms all of his peers, further affirming that his approach is the best. All is well until something happens in the market that the trader wasn't expecting, their strategy blows up, and they lose everything. Taleb's story demonstrates why survival is the ultimate financial goal because it doesn't matter how you perform for a month, a year, or even a decade. All that matters is what you can keep in the long run, whether you can make it to the end game. This is why I'm not a fan of those who generate income by selling options. So he doesn't go against FOMO Momo traders. He goes against option sellers. These people are trading immediate rewards for future risk, and when those future risks inevitably arrive, many of them get wiped out. As Taleb writes, option sellers, it is said, eat like chickens and go to the bathroom like elephants. Option sellers are the opposite of investors. Collect rewards now for risk later. You don't have to sell options or run a Ponzi scheme to fall victim to this either. Plenty of ways that retail investors do this on a much smaller scale. They put most of their money into a single stock because it's surging upward. They choose their returns with leverage or chase the latest trend. All of these work great until they don't. Unfortunately, when they stop working, you can lose more than just your capital. You can lose your confidence too. That's where the psychological cost of investing shows up. You start to question whether you know how to invest or whether you're just lucky. Man, confidence is huge, bro. In investing, confidence is huge. So this is why survival matters far more than short-term performance, because survival allows you to compound your money for a longer period of time, and it's the compounding that builds true wealth. There's a great irony in this though, because the people who compound their money for decades aren't the ones you typically read about. There's no headline for someone who invested consistently for 40 years and retired comfortably. There's no documentary about someone who built a small fortune while working a 9-to-5 job. But these are the real financial success stories. Everything else is just noise. It reminds me of this interaction I saw not too long ago about index investors. I've never met a serious investor that only invests in index funds. Have met plenty of rich ones though. So if you want to be financially successful, just survive. Thank you for reading. I love this. I loved it. Man, bro, we deviated so far. um, I guess that's gonna be like the main point of this episode now. But like, there's a very good lesson in that article, and this is why I'm saying if this is not a signal, then I don't know what is. Okay. Emerging markets active allocation in global active funds still pretty low. Still pretty low. GEM funds marked the fastest annual pace of buying over the past 2 decades. So 2026 year to date, fastest, right? Starting the year, you see that huge like outperformance compared to the other years. Yeah, I'd be careful. But here's one thing I'll admit about myself. Whenever I think we're at a top or a local top, whatever, I tend to be early. I tend to be early. Um, from what I noticed, I might be wrong, but I feel like I tend to be like a month early. Um, at least like when I want to short, like to get like a decent, at least 5% pullback on the indices or something like that. But yeah, I want to try working on, if I think something looks good or indices look worth shorting, maybe just give it a couple more sessions. But I itch so much and sometimes I just can't control it. And that's my what what's the word? It's at the tip of my tongue. Anyways, emerging market valuations have reset to 10-year emerging market valuations have reset to 10-year average levels and remain at a wide discount to U.S. and other key developed market regions globally. Okay, so China, it's right here at 11.6. Latin America still very cheap despite its huge high performance last year, this year as well, and South Africa too. Yes, there's a lot of juice left in these moves in these markets. Upgrades to North Asia, EPS growth pushed over 2026-27. MSCI emerging market EPS growth forecast to 34 over 40% from 23 to over 13%. This is by the market year. Okay, next, MSCI China 12-month forward PE. Oh, we went over this already. Uh, don't need this anymore. PDD seasonality. April's typically a bottom, so that's why I've been adding to this, and I've seen call flow, I've seen put selling, but only time will tell. Only time will tell. Alibaba Group Holdings seasonality relative to S&P 500. JD, KWeb, also typically bottoms in April, but relative to S&P 500 in May, whatever, we'll see what happens. AI winners and losers, AI memory, data centers, AI semis, AI software, loser. Call put ratio activity, big jump again, but still could increase for a couple more weeks. I don't know, whatever. The 2018 analog. Earlier, I mentioned 2018 as an interesting comparison year, and here's why. That was the year when earnings were booming as a result of the TJCA in 2017. But this did not prevent a 10% correction in late January and another 20% decline in quarter four. It's something to keep in mind as we ponder how much support the robust earnings backdrop can lend to a market that needs to absorb a lot of headlines. Okay? So this is 2018, and this is 22 rate reset. Okay, but we're focusing on 2018. I've also been, comparing or anticipating 2026 to be similar to 2018 in terms of market performance. And here's a note that I made back in end of September of 2025. Looking at 2018 charts, market was very volatile. I wasn't around back then, but simply just go back through the charts and you'll see. Indices closed red, but a lot of the long terms that we're positioning in closed green that year. Not just a little, but by a lot. IDBM, the Russell 2000, was down 11% year to date, but most of our individual names were up. Just pointing out there could be major divergences between indices and our individual names, okay? And I did some of that a day or two ago. I was doing I was using Weeble's bar replay. I was looking at 2018, very volatile, and I was comparing to each single long-term stock's performance for the same time period, and it was very similar. No, it was not similar. Sorry, it was no, it was, but it wasn't. I don't know how to explain. So yes, they would pull back when the indices would pull back, but when they would pump even more. And sometimes when they pull back, they just pull significantly less, But again, each one was different. But what I took from that is if I'm anticipating 2026 market performance to be similar of that as of 2018's, then I want to be careful when indices have bounced a lot, like it has already the past couple of 2 weeks. But I want to be greedy. I want to be not fearful. I want to buy when indices pull back. Okay. But that's it. And yeah, I don't know. Like, again, I mentioned last episode, Etsy, Genrac, Etsy, Generac, Advanced Auto Parts. There's another one. There's another one. There's another one. I can't remember. But like those three plus another one that I can't remember have some really good chart setups at the moment. But we'll see. We'll see. QQQ has seen lower volume on this squeeze. That's a yellow flag. Despite yet another upside surprise to retail sales, inflation-adjusted retail sales have declined for the so prices are rising faster. Consumers are spending dollars, but are not necessarily consuming more output. ADP private payroll data has jumped. Annual S&P 500 revisions very high to start the very high to start the year, but since 2011, analysts have revised their EPS estimates down during quarter one. The average revision across that time is a decrease by 2%, but not in 2026. Completely the opposite. I read it's typical to see earnings revisions to the downside in the first quarter because they're basically acting like a, what do you call it, kitchen sink. There's another phrase, I forgot it, whatever. And so that throughout the year they beat their fucking estimates or price targets, whatever the hell. Anyways, we are likely. Oh, and here's another thing that I wrote. Pretty much the same thing last quarter, which was quarter four of 2025. Analysts usually lower EPS estimates, but they didn't that quarter. Anyways, let's get this over with soon because I'm getting tired of talking. We are likely in the early stages of another AI productivity boom. Not AI productivity boom, but productivity boom. In this case, it being AI driving it. The gap between NDX and HS Tech is starting to get extreme. This kind of divergence is rare and does not tend to last. Can Chinese big tech really stay isolated? So again, big outperformance from the Nasdaq compared to the Hang Seng Tech Index. While global AI leadership remains concentrated in U.S. hyperscalers, China's AI story continues to evolve in a more fragmented way. Parts of the onshore market are starting to move, with Chinex breaking higher, but skepticism around a sustained catch-up in offshore China tech remains. That said, persistent underperformance has kept expectations light, leaving room for a sharper move as sentiment turns. So again, persistent underperformance has kept expectations light. So earnings coming up in a month, 3 weeks. Hey, if expectations are low or not that high, and we get some good earnings, expect some explosive moves to the upside. Okay, we just need a trigger. We need a catalyst. We need something. Okay. Volatility. It sounds so weird to me. And offshore China remains subdued, with HSCER 1-year upside volatility sitting in the low 20s. That's relatively cheap for upside exposure. At the same time, dealers have flipped short gamma, meaning upside is less dampened, making calls a cleaner way to express bullish views. Key point here: dealers have flipped short gamma on the Hang Seng. Okay, so again, setting up for an explosive move, we just need a catalyst. High beta versus low volatility. High beta stocks outperforming. Again, all these meme stocks rallying. You saw that car stock. It's again getting frothy wise. Alibaba opens QuantApp to partners with China Eastern Airlines tie-up. Here's a note on L'Oreal's latest quarterly report, which is Estee Lauder's biggest competitor, and it's a good note. Okay, so they had the strongest report in 2 years, boosted by. And here's a note on L'Oreal's recent quarterly report, which is Estee Lauder's biggest rival. Okay, so they had their strongest quarterly sales in 2 years, boosted by Chinese market and the lipstick effect that is driving demand for beauty products in crisis wary Europe. So I recommend you go watch my second to last video where I talk about Estee Lauder and the Puig deal and why I think it's bullish despite what market is pricing in at the moment. Chief Executive Nicholas, don't know how to pronounce the last name, hailed a recovery in beauty shopping in China linked to an improved performance of the country's stock market. They're seeing improvements in Chinese sales, okay, which could be a good sign for Estee Lauder as well in China. And again, Estee Lauder, a big part of the thesis is Chinese consumer. He also credited the lipstick effect, where consumers in the midst of a war turn to small indulgences for comfort. Europe, for me, is the absolute demonstration of what we call the lipstick effect or the dopamine effect of beauty, he said. He added, there has been absolutely no change in beauty consumption patterns so far, despite the soaring oil prices and global market turmoil unleashed by the Middle East conflict. However, he said that if higher costs of logistics and materials such as plastic persist, the company may have to increase prices later in the year. We expect both the market and, more importantly, L'Oreal to grow faster in the full year of 2026 than it did in 2025. And of course, this start of the year is encouraging news for us. He said the company's consumer research showed that even though consumers are worried and they have some preoccupations, they may cut on high value items, but they use beauty to compensate. A big point that we mentioned in the Estee Lauder Puig deal video from 2 videos ago. L'Oreal's strong results contrast with the weaker performances at other consumer companies as well as luxury groups such as LVMH and Kering, if I'm pronouncing that right, where the Middle East conflict has knocked first quarter growth. So yeah, Estee Lauder, it's consumer discretionary, but you could also categorize it as consumer defensive. Okay, that's what I like about it. And women, they like makeup. Okay, they like makeup, and again, they're making more money. So women have more money to spend compared to previous generations, and they'll continue to have more money to spend in the future. And it's honestly, it's very simple. Don't have to overcomplicate it. Okay. Try to Diaz. So yeah, here's the Generac monthly chart above all the EMAs. Looks really good. I have been seeing call flows since last month for like 250, 240, 260 maybe. I haven't gone in yet. I don't know why. I mean, I haven't found like a great entry, and if I miss it, it's okay. I don't care because I have a lot of shares, so not worried about missing the options move on that. Alibaba, man, I don't know what it's gonna do. PayPal, retesting that $52 zone, needs to reclaim. If it rejects here and it goes back to 40s, will not look good. We'll just see what happens. At this point, I'm already all out of my swing trades. I might go back in maybe next week. I don't know. We'll see. But I took my profits. I'm happy with it. I also sold my stock position, my commons, when I hit break even around 51.80. That was always part of the plan. Again, I was dip buying. I was very greedy. I had my bucket out. I had my bucket out when it was raining. When it was raining gold, I had my bucket out. I was collecting all this gold, man. Everybody was scared. Everybody was panic selling. I was like, give me more. Give me more. Bro, you always gotta just stay prepared. Okay? You don't need to be the smartest. I'm not the smartest. You just gotta be prepared. You gotta do a little bit more research than others. Okay? You gotta look one more time compared to the others. And you'll be okay. So again, that was the plan. Why? Because to sell the stock commons, because I bought so many in the money calls for like 2 years out that my plan is just to convert those into shares at the time of expiry in 2 years. And if I'm right about the technical setup, then PayPal should be over 100 in 2 years, or at least above 67. Bear case over 67. And if it's still down here in 2 years, whatever, they expire worthless, or I don't know, whatever, and I'll just buy shares again or more in the money. I really don't care. I have a plan. So that's why I was able to sell my shares. And once I convert those options into shares, that stock position will be slightly bigger than my Alibaba position. But I could always sell a little bit more when I convert them. And my Alibaba position is my biggest position. That's like 30% of my portfolio. So, yeah, or if, I don't know, we'll see what happens. I just always had a plan. And I wanted to free up cash. Why? Because I really believe this is going to be a very volatile year. I don't think March was the last of the selling that we've seen for this year, okay? I think we see more big volatility. And in that case, I need cash. I need money to capitalize when we got those moves, to either buy more stock, or to buy options to trade the short-term dips for the short-term pumps. Okay. But yeah, Canada Goose setup, that wick off accumulation. I'm looking for a breakout from here now. Again, I had some April calls for like 17, 18 strikes that I bought back in 2025. They expired worthless last week. Whatever. Waiting for some call flow, but this one never gets call flow. I might just have to be the call flow, you know. But given the patience, if anything, I'll just play the breakout. I don't know. We'll see what happens. Or I'll play some earnings autos when earnings come closer. Kraft Heinz, nice trend line here. Diageo, nice bounce from that slice through support. Etsy, sort of a wick off accumulation as well. It's free to go to 80s as long as it's above 58. Generac, again, went over that, but this is the weekly. And this is the daily. Cup and handle breakout, retest, and now it's going for another high. Advanced Auto Parts, my favorite chart here. It looks so nice. Doesn't it? Dude, I've seen this setup before. And it's so good. And somebody's buying $70 and $75 calls for like June, I think. I think they know something for earnings. I think they know something, and oh my god, I like this chart and I just get so excited. But like, it's looks so because this is the monthly chart. On the monthly, it looks so good, but the daily could be very, very choppy. The daily could really get you if you don't time it right, which is the only reason I haven't been playing like 1 month to 2 weeks options. I only added June, September calls, but no, chart looks way better now. So I think I'm gonna get in on some more size for options. It looks really good though. It looks really, really good. Like, dude, does that like? Oh my god! Oh my god! Oh my god! Holy shit! Look at this. It's already like at 60, I think, or it pulled back. Looks like it's going to 70 easy. PDD. This is the inverted chart. Looks like an inverted head and shoulders, but it went lower today, so I don't know if it still looks like that. Tried this double top on Caterpillar again, took the loss, taking the loss. Oh well. Okay, now I'm gonna show you why Interactive Brokers is my favorite broker, and that's due to the research tools. Not because of their user interface, it's mid. Webull, best user interface, best tools for technical analysis and all that. However, research tops it, at least for my trading style, because I need to do a lot of fundamental analysis and a bunch of other stuff, right? So look, connections. Okay, I searched up Etsy stock, and it'll show you like related companies. Look, competitors, Amazon, eBay. This you could search some more competitors. You go to Emerce, online marketplace, whatever, right? Let's go to online marketplace, and it'll show you a list of companies, and it gives you like a description of what they do. You see their competition, whatever you want to call it. Okay, you even get Morningstar research reports for free if you're a client with them. Like, go to Morningstar, because unless I'm wrong, you usually have to get a Morningstar subscription so you can access the research reports. Look, full report, download PDF, downloaded, full report right here. Look at that, their fair value was updated 2 days ago. They have a fair value of 70. And full report. I love Morningstar's research reports. Abandoning house or brand strategy, 10%. I'm not gonna go into it. I just want to show you. And you get this for free just by being a client with Interactive Brokers. You get their whole note, dude. So much alpha in here. So much information. Okay. Boom, boom, boom. They show you the fair values of their rivals, the economic rating modes, the economic moat ratings. Sorry. Give you comparison. You see, they go deep into it. You know, you want to pull as much information as you can from various sources so you can form your own opinion, so you can form your own thesis. Okay. It shows you their fair values of Etsy and the competitors, how it changes over time. Okay. But yeah, man. Again, this is not to go into the research report and all that, or else I would be here all day, because it's a few companies. That's the Morningstar. You get tapering sentiment, analyst price target, average price target 64, the highest 83, average 64, low 47. Not enough data to generate a new sentiment score. Go to tip ranks ratings. it shows you the the ratings of different analysts. Okay, gives you the ranking of the analyst. This analyst has a high ranking, 75 price target high, 59. Cantor, Fitzgerald. I always keep an eye on this firm. Why? Because it's run by Howard Lutnick's sons, previously run by Howard Lutnick himself, and he's a he's a handler. He's one of those, and he does not give a single fuck. He does not give two shits about insider trading. The motherfucker. He did it with Alibaba. They did it with Alibaba. At least that's why I suspect. And anyways, whatever. At least EG ratings. You know, you get a lot of information. You get a lot of information. Okay. That was just analyst ratings. Social sentiment. I love the social sentiment ratings that they have. Love it. You can see, look, tweet volume score for Etsy very low. It's had a huge run up, like 35% the past month, and tweet volume score is still very low. Could run more. Tweet sentiment score, meh, neutral. Social sentiment score, you see, I love this. Let's go to 6 months. It was very low. In March, market bottom, and look, boom. Let's go to 1 year. Sentiment was as low as it was back in October, back in September. I love this sentiment score. It's our sentiment rating tracker, whatever the hell. Not sure what this is. You can make your own estimate. Let's see. Let's keep going. EVA equity research. Nothing to see here. Smart Insider. Not working. Tip ranks. Underperform. Hedge fund trend decrease. Insider transactions. Sold shares. Technicals. They say negative. I think positive as well. Yeah. Okay. Trading Central. I like the Trading Central as well. Or was it the news? No, I think it's the news. Shows you in what part of the economy do they do better. Expansion. But I think there's a good defensive. Yeah, I think there's a good defensive part to Etsy that the market doesn't think of. And that's, if you go through a rough patch in the economy, if people lose jobs, if people need more income, they'll look. Some people will get creative. They'll make their own things and try to sell them online. What do you do that on Etsy? You could have sold clothes on Depop, right? If you need money, but they sold Depop, whatever. It's okay. You could do the same thing on Etsy though if you make things and sell them. Let's see, market buzz. Sentiment score. Yeah, it's still, it's not that crazy. Anyways, where was I? Technical insights. Let's see what they have here. Look at that. Oh, Weibo has the same thing. Technical views. That's cool. It's pretty much the same thing I'm seeing as well. Here, go to news. I like the news. There's this one. I like the news because they just have a lot of things. But Weibo has the same thing. But they have one from I found it. It's Reflexivity AI. They have, look, the projections, top notch. From my experience, top notch. Okay, this one they missed, whatever. But they even show you like the percentage of conviction and all this other stuff. Like, oh yeah, a rating 5 out of 8 stars. Why it might move. Consistent relationship. Look, I'm not gonna read it, but I've used this before and I've had huge success with this. Reflexivity AI. So whenever I see, I haven't looked at it in a while though. So let's check another company. Let's check PayPal. Maybe they have something for PayPal. Wish I could search up, but I can't. Just look for reflexivity. Here we go, reflexivity. Here we go, reflexivity. Here, you see, it works perfectly for PayPal. Okay, they have a price target of 66 over 6 months. We'll see what happens. How many stars does it get? 5 out of 8. Okay. What about Alibaba? Let's go to Alibaba. What's going on here? Get me out of here. Oh, shit. Bro, I'm tired of sitting down, bro. What am I doing? Search up reflex. There's nothing for reflex. Come on, man. Seriously. That's fine. Let's try another one. Let's try Advance Corp. There, we got it. Advance Corp. Price target of 20, 25, 28, 26, I mean, over the course of 6 months. We'll see what happens. You know, and they give you all the data as to why, how they came to this, what triggered it, and everything, what they're comparing it to. Okay. And they give this, what rating did they give it? 4 out of 8. Not the highest conviction. It's alright. Let's try Generac. Hopefully they have one for Generac. News. Here you go. 290, 291 over 6 months, or 3 months actually. Okay. Matches with the flow. 5 out of 8. You know, I really like their stuff. Really, really like it. Let's do one that hasn't bounced yet. I don't think they'll have something for this. No, that has bounced. I think they'll have one for this. I think they've had it before. For Meituan. Never mind. Nothing here. One more. Advanced Auto Parts. Yes, yes. First one. Yesterday, initial projection. Oh, very, very tight for 2 weeks. Well, that's very short. Horizon. Do they have a longer one? Yep, right here. 6 month horizon. 67, 68. Let's go. 5 out of 8. Anyways, guys, you get the point, right? So my favorite things from this. So yeah, sorry that took a while. That was probably very boring. You might have not even watched the whole thing. It's alright. Oh, I'm low energy now. I'm low energy. I'm tired. Oh, my neck hurts. I'm gonna get up and take it on a walk. And yeah. Alright, thank you guys for watching. We'll be back soon to sniff out the market for some more golden nuggets. Alright, see you guys. Wait, one last thing. Again, nothing here on this video is financial advice. Should not be considered as financial advice. Speak to a financial advisor before you make any financial decisions. We are not responsible or liable for any of your financial losses. If you have any, everything here is opinion only and shared for educational and informational purposes only. Thank you.